Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of corporate America. And if you're ready to dive deep into a company that makes everything from security scanners to medical devices, then buckle up, because OSI Systems' latest filing is a roller coaster of numbers and risks you absolutely need to know about before we jump in. If you're getting value from these breakdowns, hit that subscribe button and ring the bell. We also have a fantastic community over on Discord in the description below to continue the conversation, so make sure to join us there. Alright, so what we have here is OSI Systems' yearly report for the year that ended on June 30th, 2025. And as usual, these reports can be a real chore to get through, but we're going to cut through the jargon and get straight to the juicy bits that actually matter to you as an investor or just someone curious about how big companies operate. Normally we dive into the business description, but honestly the numbers are way more interesting. Let's fast forward to the good stuff and see how they actually performed. Okay, so looking at the top line, OSI Systems brought in a cool $117.13 million in revenue for the year ending June 2025. This is a solid 11.3% jump from the previous year. That's like adding a whole new bunch of customers who are actually buying their stuff, especially in the security division, which is their biggest moneymaker, bringing in almost 70% of their total revenue. That's a really strong showing in a market that's always dealing with security threats and government spending. Their optoelectronics and manufacturing division also saw a bit of growth, about 7.5% from the prior year, mainly driven by their contract manufacturing business. That division might not be as big as security, but it's definitely contributing positively. Now, the healthcare division is a bit of a mixed bag. It actually saw a slight decrease in revenue by about 1.8%. This sounds bad, but when you consider the pressures hospitals are facing, like inflation and staffing shortages, it's not a total surprise. They're still bringing in a decent amount though, so it's not like it's collapsing. Let's talk gross profit. This is what's left after they pay for the cost of making and selling their products. And OSI Systems is doing pretty well here. Their gross profit went up by about $56.7 million to a total of $587.2 million. This means they're not just selling more, but they're also managing their production costs pretty efficiently. Their gross margin stayed about the same as the year before, which is usually a good sign that they're not having to slash prices just to make sales. Next up are the operating expenses, which include things like salaries, marketing, and R&D. Selling general and administrative expenses went up by about 7.9% to 290 costs, which makes sense in today's world. But here's the interesting part: even though expenses went up as a percentage of their total revenue, they actually went down a little. This means they're getting more bang for their buck on these expenses. Research and development expenses also saw a bump by about 12.4%. This is good to see, especially in their security and healthcare divisions. It shows they're investing in new technologies and trying to stay ahead of the curve. On the debt side, their interest expense crept up a bit to $31.4 million. This is mainly because they took on more debt to fund their growth and share buybacks, but it seems like they're managing it okay with a beneficial interest rate swap helping them out. Their income tax provision went up to $36.5 million, but their effective tax rate actually went down slightly. This is partly because of some tax benefits they received, which is always a nice boost to the bottom line. Now, let's quickly touch on some of the risks they're facing, because this is crucial for understanding the full picture. Okay, so this section is pretty dense, but it boils down to a few key areas. First, there's product liability. If their security systems fail to detect something dangerous like a bomb or a weapon, they could face huge lawsuits. They're also saying that government contracts can be cancelled suddenly, which is a big deal because a lot of their revenue depends on these deals. Another big one is their reliance on acquisitions. If they don't integrate these new companies smoothly, it could cause major disruptions and costs. This is an interesting one. They're saying that if oil prices drop too low, it could hurt their business because some international customers' budgets are tied to oil prices. Plus, they're dealing with currency exchange rate fluctuations, which can mess with their reported profits. They're also up against some pretty tough competition in all their business areas. They admit some rivals have way more money and resources. So staying competitive is a constant battle. And of course there's cybersecurity. They're constantly under attack, but so far they say no cyber threats have had a big impact on their business. This is something to watch very closely, especially with all the sensitive data they handle. Tim, now let's hop over to the balance sheet details to see how their assets and liabilities are looking. Okay, so their accounts receivable net went up significantly from $648 million to $87 million. This means they're selling more on credit, but it also means they need to be extra careful about collecting that money. Their allowance for doubtful accounts also increased a bit, which is expected when sales are growing. Inventories also saw a slight increase. This isn't necessarily bad, but it could mean they're holding on to more stock than usual, which can tie up cash. Looking at liabilities, their bank lines of credit went down quite a bit from $304 million to $78 million. This is actually good news because it means they paid off some of their short-term debt. However, their long-term debt jumped up significantly because of those convertible notes they issued, which were $350 million. This is a major change and will impact their finances for years to come. On the equity side, their common stock value increased and thankfully their retained earnings also grew substantially. This means they're making money and keeping it in the business. When we look at the bigger picture, OSI Systems is showing growth, especially in their core security business. They're investing in R&D and managing their expenses pretty well. Despite taking on more debt, the reliance on government contracts and international markets definitely introduces some risks they need to manage carefully. Overall, OSI Systems seems to be navigating a complex market effectively. Their revenue growth is strong, and they're maintaining their gross margins, which is impressive. Given the current economic and geopolitical climate, they're managing their risks reasonably well, but the ongoing cybersecurity threats and the significant debt from the convertible notes are definitely points to monitor closely. So that's our decode OSI Systems' recent performance. What do you folks think about their growth strategy and their debt levels? Let me know in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more deep dives into the world of business. Thanks for watching, and I'll see you in the next episode.